we have the Sula management on air, they tell us about the penetration of wine is not too much. But it seems it's still over there only because the volumes are not picking up for the industry. I think it's struggling and they're saying a couple of one-offs. But you need to see growth, for any company.
For the last couple of quarters, there hasn't been growth, and that's reflected in the stock price as well. From a peak, the stock has corrected a fair amount from almost 700 rupees. It's just shy of that 400 rupee mark. And the problem is that not only is the revenue weak, the outlook in the very near term is also weak. If you look at the second quarter numbers, revenue decline of 1.1%, EBITDA as a result of which down by 24%, net profit down 37%. Overall volumes declined by about 7.5%. This schism that we're talking about, premium doing a lot better than popular, is playing out here as well. Elite and premium volumes did grow 4.1%, revenues grew by 7%. But because of the weakness that we're seeing in the mass products and urban consumption, that has reduced. Wine tourism itself grew by just about 1%. The management is saying this slowdown is transitory, led by urban consumer demand and temporary disruptions in Karnataka and Delhi. What about H2 then? Seems like the soft consumer demand continues in H2. And in this quarter itself, we have the Maharashtra election. Sula's main market around Maharashtra itself should, give it some more, caution in the third quarter. And as a result of which, while they are optimistic, they're cautiously optimistic for the second half. There would be expansions that would aid further impetus to H2 FY25 performance. But I think the market that we're in right now, the street rewards outperformance more than disappointment on even subdued expectations, and as a result of which the stock is lower despite having corrected from the highs.
Indeed, Mangalam. Well put. Thanks a lot.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.